Good evening, everybody. Welcome to this new EAE session. Today, we will analyze some topics that are really important for corporations in Europe, in North America, and also in different parts of the world. If you remember the previous weeks, we analyzed different topics about digital branding, about marketing. Today the topic is 100% different, but is also really essential for many corporations, because today we will focus on how geopolitics is just determining how corporations, private and public corporations, they are just implementing their business in Europe and also in other parts of the world. So my name is Pablo Medina. I work as professor at the EAE Business School here in Madrid, Spain, and today just we will attend all of us this session with Professor Luis Miguel Gomez Elvira. So he's a professor in geopolitics, also in this business school. He has worked for many years in this area. He has also published different papers and articles about this topic. So as you know, because if you are reading newspapers, you know that there are many geopolitical challenges all over the world, especially in the Middle East since the last 10 days. So there are many issues between Iran, Israel, also in Europe between Russia and Ukraine. So all these conflicts, all these wars, they are just affecting companies in those countries, but also here in Europe and North America. Because of this, so people they need to work differently in companies. They are recruiting employees with different skills. Amid all these different backgrounds of people, they are also implementing AI-based tools. So in all these frameworks, so as we will see in this session with Professor Luis Miguel Gomez Elvira, so companies, they are revamping their corporate strategies. They are trying to revamp how they organize internally their teams, how they implement their business expansion plans, how they achieve their goals. So this is what we will try to do today. So as you can see on your screen, so this session is entitled When Power Shapes the Markets, Geopolitics and the Future of Corporate Strategy. So Professor Luis Miguel Gomez Elvira, so yes, he will explain this topic for the 40 minutes, something like this. And then so yes, you can ask questions, so you can use the chat tool on LinkedIn and YouTube just to ask different questions. And at the end of this session, so yes, I will be sharing all your questions with Luis Miguel. Okay, so the room is for you, Luis Miguel. You can go ahead.
Thank you very much, Pablo, for this introduction, this warm introduction. I'm pleased to be here with all you, speaking about geopolitics, right? Which is kind of a trendy topic nowadays. But I would like to give it a broader approach than just following recent news and what's going on. We'll have some time for that as well at the end, because I expect some questions from some of you that maybe we can discuss and debate. But the idea of this session is to concentrate some ideas on how these power dynamics are reshaping global markets, how this is becoming a new paradigm. Okay, we're living in a new world order, and this is something that has been happening for a while. Okay, so that's what companies, what firms, what professionals, also investors need to realize. Okay, that the world is a different world than the one that we were used to. Okay, so first, before showing any content and disclosing about the content of this course, I want to start not with a slide, not with some representation, but with a question for everyone. And I want you all to hold this question for the next 40 minutes, 45 minutes. Imagine that you were in the boardroom of Volkswagen in 2021. You know, Volkswagen is one of the most sophisticated industrial companies on earth, right? Well, imagine that you were there sitting in this board, and then you were told that within 18 months, you would be legally prohibited to expand your factories in China, for instance. Imagine that. Also, that you would be within 18 months forced to choose between American subsidiaries and your Chinese customers, right? Also, imagine that you would have to pay 300% more for your energy. Same thing. I mean, kind of, an impressive acknowledgement or, announcement, right? And then also imagine that, someone told you that this company, this Dutch company, ASML, would take a 27% drop in one single day because of one political decision. So that's how these policies and these decisions are affecting companies globally. And it's not that maybe companies are unprepared for this. It's that even the best managed companies in the world are sometimes or have been sometimes blind to what was coming, not because they had little intelligence or they lacked intelligence. They didn't have research or people that were informed well enough, but maybe because their strategy, all that strategic framework that they grew with was evolving and was changing, and it no longer existed as it was. So that's how geopolitics are reshaping things in business. And this is a very impressive, maybe, example, but there are many more. So imagine that. I mean, you would say, come on, Luis, I wouldn't have believed you if you said that, coming from the future and announcing this. Well, companies should be prepared for this, don't you think? So let me advance this a little bit. So the idea here is that you all realize that the world, that your strategy textbooks were telling you about is gone, is no longer there. So we've lived for 30 something years on this paradigm of free trade, capital mobility, some sort of international also rule of law, and this hegemonic presence of the US, right? This author, Francis Fukuyama, called this the end of history. This situation where we could say that wars were something that we had overcome. Okay, so we had all this, and then the world was growing on this globalized paradigm. But after some time, this has changed, and there are a few milestones that we can identify out there that forced this change. Okay, it's not something new to all of us, that focusing on what this globalization was about, so that cost efficiency, just in time logistics and supply chain idea is no longer enough. Okay, so we need to change our mindset. We need to understand what's going on. And also companies, they are now realizing all this, and also realizing how important it is to be prepared for different scenarios. Many times, I insist on this when we go through these geopolitics sessions, and we're kind of, obsessed with a scenario analysis. So thinking not in one dimension, but in more than one dimensions. So this has become a must. Okay, so about what we have seen, okay, recently in terms of this transition, okay, we're going through. We can identify these three elements out there that are telling us a different story. Okay, first thing is that China is nowadays the largest economy in terms of purchasing power parity, and this has been like this for a few years now. It's going to be, almost 10 years since this has happened. So China has surpassed the US in terms of purchasing power parity GDP. So this is quite something, right? Also, China went from 32 countries that were their main trading partner, okay, or China was their main trading partner, let's say, to more than 140 countries, okay, for which China was their largest trading partner. And this is quite recent, probably the exact number of countries is even higher nowadays. Also, we need to watch that dependency on this source for advanced technology being very close to China, also under the shadow of this Taiwan's and China dispute. So more or less, half of global advanced semiconductor production is located in Taiwan. So look at that and imagine how dangerous this is also in terms of, concentration and how, much of a systemic risk it can be, okay? So there is something going on. There is something going on. We have lived through last, let's say, 3 decades or more, all this recent time, it's been all about the hegemon or the hegemonic presence of the US and its influence globally. But now there is this, tension and this power shift going on. And it also can imply, a new paradigm, as we said, because there is no longer that concentration of influence and power. We are seeing how power is being fragmented, how influence is being fragmented, even though recent events might tell us that the US is still there and they still have this influence and this power because they act, they are a nation of action and they are constantly affecting what's going on in the markets. Look at what's been happening recently in Middle East, also with Iran and this war escalating. But we can find recent examples of that influence, persistent, and that attempt to not lose their hegemonic presence globally. Okay, so this power transition is going to tell us a new story in the future. Okay, probably that fragmentation will continue to happen, and we will see how this hegemon of the US becomes less influential at some point. But that tension, as I said, is quite tricky and dangerous. Also, it creates volatility, it creates uncertainty, instability, and it can cause, also fluctuations in the markets as we are seeing recently. Okay, so how this order that we knew has come to an end. Okay, this world order based on this liberal trade, on this free trade, this capital mobility, this hegemonic presence of the US. How did it end? Okay, we saw this US and China trade war going on in 2018, and tariffs. Suddenly we were all referring to tariffs and speaking about tariffs. It was all over the place, and we realized how fragile economies are to this, taxes and these, barriers to trade. So that changed the paradigm slightly for many companies that thought, that maybe geopolitics were there, but not so important for them in terms of their business continuity and their business success. And then all of a sudden, well, they had to look at what was going on between the US and China because it was affecting them. Okay. Then we had this COVID-19, this pandemic from 2020 and on. And yeah, logistics broke totally, so supply chain collapsed. And we realized globally that that idea of just in time, had become just too late for many. And we needed to find global companies needed to find alternative suppliers and alternative routes as well. So they weren't so much exposed to these types of disruptions, okay? Especially industries like semiconductors, pharma industry as well, and so more were, severely affected, okay? Also, we saw this Russia's invasion of Ukraine, this conflict, getting serious and becoming a real war in 2022. Well, this was like the last maybe ingredient, the last drop that the world needed to realize that something was changing. Okay, Europe especially realized that there was this fragility, this vulnerability and dependency on Russian gas and oil, especially on gas, and that made the energy markets collapse. So we realized at some point that we needed to transition to less dependency in terms of energy, okay, from Russia. So this was a huge milestone, let's say, for that system to break. Okay, it took maybe not one shock, but the three of them for the system to truly become a totally different reality. So, quoting Fareed Zakaria, author of this book, The Age of Revolutions, we are not experiencing a cyclical disruption now. We are experiencing a structural break. So we are experiencing a new reality. That's what we want to, analyze now, and where we are about to review together. Okay, so about power centers. Anytime we refer to geopolitics, there is this reality that connects geography, of course, but also that capacity to influence the world, that degree of power that can be measured, through different bars and on applying different, let's say, power metrics. Okay, one of them, of course, is that military power, and it still is. That's why the United States still is the hegemon, let's say, in terms of military capacity and military power. But behind, we see a few states and a few actors that are getting close. Of course, China. Of course, Russia still is, a very a considerable, power, especially, because of their military capacities and nuclear capacities. So, these power dynamics have evolved slightly, but more or less remain like they were. But it's about other types of influence, other influential as well tools that the world is shifting. Okay, so we have, on one hand, that traditional hegemony of the US dollar. Okay, so the markets were all about US dollar. The US dollar was the dominant currency globally, and global trade was, let's say, denominated almost entirely, not entirely, but to a very relevant degree in US dollar, and still that is the case. Okay, even though we have now new currencies and digital currencies going on, also other reserve currencies have increased, but still the US dollar, implies this dominance in terms of currencies. Okay, but then we have this phenomenon of the Belt and Road Initiative. Okay, China, I don't know if you know, or maybe it sounds familiar to some of you, but has been actively investing in infrastructure globally lately, and developing this massive, above 1 trillion investment program, controlling access to rare minerals, rare earths, critical minerals, and some, very peculiar resources that are needed, okay, in terms of technological applications. So that attempt to invest was all built within this country strategy, this planned strategy to grow its economical influence. And that is why, as we saw, earlier in this slide, China has become the main trade partner for many countries, the majority of, let's say, developed economies globally, because of this initiative. Okay. Also, the EU has remained being influential, even though we have lost some influence. But because of that regulatory power and regulatory capacity, also being ahead on some, actions and initiatives related to, to how to regulate data protection, also AI and other related, carbon reduction related as well, regulations. Okay. Well, then we have Russia. Still, it is an influential, we cannot deny, nation, and it's being visible nowadays. That capacity of Russia to turn things because of its access to energy, and that capacity to weaponize as well that access to energy at some point. And then we have also this Gulf area, this Gulf countries council, oil producers, and India. Okay. Also, there are a few agreements that connect India and these Gulf countries, but both of them, are becoming power centers, or have become power centers, and they have, important influence and increasing influence globally. Okay, so we cannot deny, oil is still one of the most important energy sources, even though we are transitioning. That's a fact, especially in Europe, because we don't want to, remain so vulnerable and dependent. But, still that oil production becomes a strategic influence itself. Okay, so what has changed, okay, in this shift from this liberal paradigm of the world order to this more fragmented, structurally, diverse and polarized and multipolarized world that we live in? Well, at the end, we have moved from that orientation to efficiency to resilience, basically, to security, to being less dependent, to being strategically more, let's say, autonomous. So this change, this shift, has also reshaped international relations. That's, how things are connected. So international relations are, at the same time, this kind of a cycle, a vicious cycle, reshaping how the world looks like. But, this shift, this new approach to not that much efficiency, but more security, more resilience, more autonomy, or less dependency, is also reshaping international relations. So both things are happening at the same time. Okay, you can think about the US, not wanting to, let's say, allow some products or some technologies being produced in China to enter its market, like freely, let's say. Well, that's a fact, because there is this strategic component, okay? Or some technologies are referred as maybe related to security issues, related to data protection, related to, that, let's say, ultra protected industry and sector. So that's something that we are watching. Okay, that's why we're seeing that constant, application of tariffs, especially in some strategic sectors. Okay, what about this term of geoeconomics? I wonder if you've heard this idea or this term, but it's becoming more and more used lately. And it's basically the use of economic tools or economic instruments to try to defend national interests. Remember that each country, I mean, there's no good or bad or right or wrong here, but each country is defending its own national interest all the time. And it's all about that. So each country tries to pursue the best for its citizens, for its people, or at least, I mean, that's legit. That's something that any nation should aspire to do. So to, provide the best for its people, its citizens. So at the end, try to pursue that national interest. Okay, we will find countries, states that have a plan for this. So they act in a long, or they are trying to plan things in a long term, from this long term perspective. Others maybe are improvising a little bit and not chasing that long term, or don't have that long term vision. But in general, we will see this, attempt to pursue that national interest. So what about the economy? I mean, it has become a weapon. It has become a tool that some countries, because of that economic, power, are using more and more. Okay, so it's not that much about protecting trade, or it's not that much about, protecting some, as we said before as well, strategic sectors and industries, trying to protect them from competitors outside. It's about, deliberately like launching some policies that are really calculated, okay? These are state policies, and these policies are calculated because they're intended to have an effect, a positive effect on that national interest. Okay, if you think about tariffs, we should realize this, okay, anytime. So it's not about something that is used only to, let's say, to punish, your competitors, or to, to act like radically sometimes, because it sounds like that. It's something that is intended for a reason, okay? So there is always more behind that tariff decision, okay? So what about these geoeconomic instruments? And we can find many, but mainly these are the six, or the pack of six statecraft instruments. Tariffs, of course, really trendy as well, because we've seen how this dispute between the US and China has driven this constant peak or increase in tariffs that went up to even 145% at some point. That was kind of crazy, and then it was literally reduced in a few days, with a few conversations. But this is showing how everyone is vulnerable, because it's not about the US and China having a dispute. Let's say it's also about the rest of the world, like contemplating this and being part of this, and also being affected. Okay, Also, export controls. I don't know if you heard about this type of policy, but controlling or blocking exports from one country in particular or one region in particular can be also applied as one geoeconomic instrument. Sanctions. We've seen this in the case of Russia. Russia has faced severe sanctions since this Ukraine's conflict started in 2022. So Russian banks being excluded from this SWIFT, which is the international banking system. Reserves being as well frozen. So that's something that some countries can overcome. Trying to approach alternative monetary systems, using blockchain, but this is a serious instrument as well, because it limits totally that capacity of an economy to relate to the rest of the world. Also, investment screening is being applied. There are, specific regulations that affect investment because in certain sectors or in sector industries, because these are considered to be critical. Okay. Well, we can see that happening in semiconductors, AI nowadays, and some other critical infrastructures. Industrial policies, these are, packages of policies that are intended to long-term reshape certain industries or sector. And this is kind of an instrument as well. And we can see this, the example of the US CHIPS Act, which was intended to increase that competitiveness of the U.S. Developed and manufactured chip industry. This Inflation Reduction Act as well, this EU CHIPS Act as well in the EU, also the Green Deal in the EU. All this is kind of a state policy measure that is intended to revitalize some sectors in a specific. And then, changing regulation standards, everything related to norms as well is an instrument itself. Okay, so we can see that in the core of in the context of the EU, and nowadays happening with AI, how this AI Act is becoming the AI standard globally. So it's like, moving ahead of the rest can also give you a competitive advantage. I'll go slightly faster here, but I wanted to show you as well how this US and China rivalry happened, okay? But this is something that most of you know because you've been following the news, and it's been on the news, I think constantly for the last not even more. I mean, I would say for the last 8 years almost. Okay, so this dispute in technology, this dispute as well in finance, because this dollar versus yuan tension has been also escalating. The tensions that we are seeing in the Taiwan Strait, Taiwan needing to have like a plan B just in case. And that plan B is all about this Taiwan Semiconductor company, because I think that represents Taiwan entirely, and it produces 92% of the world's most advanced chips, and it's the company that leads the sector. So this company is embracing that alliance with the US, opening facilities in Arizona, trying to diversify, trying to, position differently, and that strategy is needed for that company to survive, no matter what. So geopolitics have become, for this sector in particular, for companies that like Taiwan Semiconductors, for Taiwan in particular, a must. Okay, so understanding that geopolitical dimension has become a must. Otherwise, surviving can be really challenging. And then we have this, this trade, this tariff escalation, and this trade, cost increase that has been like kind of, happening constantly all along this last 8 years, we can say. Okay, so this defines how the relationship between the US and China has evolved, and how this contest and this dispute has been happening. Okay. What about technology? When we look at the past, we look, at what history has taught us, because we should know where we come from. Okay, globally, and we should know about our past, our history. But now that territorial component, that geographic component, that historically, let's say, was one of the cornerstones of global influence and also geopolitical influence and power, um, has changed and has evolved and has left technology take the lead. Okay, so it's kind of replacing this technological advancement, that component of geography, of territory, as well as access to resources, access to sea, to maritime routes, which used to be the primary strategic asset for countries, for states. So now technology has taken the lead, we can say. So we see examples. Like this one of Taiwan Semiconductors. Well, it's a very clear case of a company that needs to evolve and needs to find a way to be less vulnerable to what's going on around, and facing this with the advantage of having something that is very precious and demanded, and something that the world needs, but at the same time realizing that it is a company that it has this vulnerability, because of the concentration of risk, okay, that is located in a very, singular spot. Also, companies like ASML that face this single day collapse, as we said initially, of 27%, well, they have realized this risk. They have realized that, one meeting, one political decision can lead to this anytime. So it can distract value, and you need to be prepared for this. Okay. What about this weaponized interdependence? What does it mean? What does it imply? Anytime we consider supply chain, okay, supply chain has been maybe something that we face nowadays with some concern, because we are aware of choke points, of spots that can be, kind of challenging and delicate. We're seeing that nowadays with this Strait of Hormuz being closed, or partially being closed, and what's going on. So more than ever now, states, we can say, and this is a quote by Farrell and Newman, states have discovered that they can weaponize the networks through which money, goods, and information travel. The result is a new form of power, okay, one that punishes those who depend on networks that others control. So what this means is that just going through whatever route, whatever path you need to go to, to transport goods and services that is under control of someone else, makes you vulnerable, makes you dependent, and makes that, transit, it makes it become your enemy's weapon at some point. Whether you are, friend or close or geopolitically close to that country or region that you need to go through, or you can have an issue. Okay, so this is, as how important this supply chain, global supply chain infrastructure has become. Okay, it has also become a weapon itself, and it has created dependencies and vulnerabilities globally. This is a quite peculiar case that we see in the case of energy. Okay, what happened to energy prices, and we're seeing this happening again. So when I was preparing this presentation for all of you, well, we were still like, not that much into these recent events of this war between the US, Israel, Iran. But that energy shock was something that could happen at any time. Like it should have been at least in one of the scenarios that any global company should have. But, again, as I said initially, many wouldn't believe that, one day, just in one day or 2 days, gas prices could have gone up 20%. But this happened not long ago, okay? When we entered into this war, Ukraine and Russia in 2022, well, Europe had this dependency of 40% of Russian exported natural gas, liquefied natural gas in particular. So that was a lot, 40%, especially for some countries like Germany. This was a huge dependency. So what happened naturally, and we're seeing something like this going on recently, is that there was this energy inflation, right? So energy prices went up by much, and that created, a cost push inflation in Europe that was, difficult to tackle, let's say. Okay, it created a painful situation economically, and some countries were especially affected by this, Germany in particular. So we have learned from all this, but as you see, things like happen again after a few years, and we are still like, with this surprised expression, which is something that is kind of curious, don't you think? So, I mean, we should have learned more from this past shock and experience, and maybe we would have been prepared or better prepared for something like the situation we're facing nowadays. I'm just saying, okay? So I'll go slightly quicker because I think we need to conclude in a few minutes, and I wanted to touch a few more ideas on choke points, just treat these main points that we are constantly tracking and watching with a special curiosity. Whatever happens in this choke points is going to affect the whole world at the end. So these physical choke points, which are like routes that at some point need to be taken for that global trade to happen. So we have alternatives, but most of this transit goes still nowadays through these regions. So Red Sea, Taiwan Strait, the Strait of Hormuz, which is now been in the news literally daily because of this conflict with Iran. They have become spots that we, yes or yes, need to identify as risky. Okay, so we cannot deny that there is something going on around these regions, and we cannot deny that there can be attacks, there can be disruptions. So why not covering this? Why not hedging this? Even though, of course, costs, insurance costs as well are increasing, there is no other option. Okay, there are alternative routes to these traditional routes. I don't want to extend much on how you can maybe find alternatives, but the situation is that still there is a huge dependency on these straits and these routes. So whatever happens, this Houthi conflict, November 2023 through 2025, for instance, affected the traffic from the Suez Canal, okay? And it forced many ships to go around the Cape of Good Hope, which is the same thing as saying, go all around the African continent and then add almost 15. Well, add 14 days on average, and then 1 more million per ship per trip in fuel consumption. So that, imagine if you scale it, and scale it and scale it, that's a massive added cost. Okay, so this is just an example, and this we can also, find it happening, as I said, with this conflict in Yemen, with the conflict in Gaza, also with what's happening nowadays in this Strait of Hormuz. Similarly, so this increase in cost is going to be there, okay, at least potentially. As I said, we need to think of all this as if we were planning scenarios in advance. So there is always a probability of things like this evolving negatively, okay? And we need to consider that. I want to go faster. I don't know how fast, but slightly faster, and take you through take you through what we believe to be an essential framework, okay, for anybody trying to understand geopolitical tensions, and also it can be the origin of that detection of opportunities as well. Okay, it's not only about detecting risks and measuring risks and impacts. That is important, but as well we need to keep an eye on opportunities, because there are many opportunities out there, and we will see finally how to spot these opportunities, and also maybe translate all this into a more positive message. Okay, so first we need to build risk matrix and try to address, and that's what we do, what I do as well with my firm professionally. We try to build this geopolitical risk matrix and analyze and map risks, probabilities, impacts, and do this in a way that we can be better prepared to whatever the outcome is. Okay, so we can identify different possible outcomes, different scenarios, and then address if we need to cover, if we need to mitigate them, to have a plan B or plan C, or alternative routes, whatever. Also, when it comes to supply chain, many companies that are influenced and vulnerable because of their global presence and their dependency on global supply chains, well, you need to go beyond your tier 1 suppliers. You need to build tier 2 and even tier 3. So the more you spread that network, the more resilient you are as a company. Okay, so based on what we've seen, on what we've experienced in the past, remember these shocks we've been going through recently, there is no option but to diversify more in terms of supply chain. But that can pose, of course, more costs. But, in exchange for that extra cost, you get a better coverage as well. So that's something that most firms are doing nowadays, okay? But not many did, let's say, 20 years ago or even 15 years ago. So this is something that has been evolving and changing, and has maybe landed on that corporate culture recently at a different scale. Okay, then we have the geo-economic strategy compass, aligning, deliberately with some block. There are a few blocks out there, easy to identify. We have the US, we have China, we have Russia as well, we have Europe. Okay, we have different blocks. Aligning deliberately with one of these blocks, that becomes a strategy itself. Imagine any country in Latin America. They can opt to be closer to China, or to be closer, or maybe to be closer to the US, depending on their political environment, or what's best for them, in terms of investment, or foreign direct investment, capital inflows, infrastructure investment. So they need to opt at some point and choose. Many companies need to do that as well. So that optionality, having the capacity to, to position and to choose, uh, has become a strategy itself. Okay. Geopolitical due diligence. Okay, in any process that implies, of course, M&A processes, but valuations of companies, analysis of firms, of sectors, of industries. That geopolitical dimension has become a must as well. So we also focus on that, okay, on that acknowledgement of the geopolitical dimension and that capacity to also, understand it and dissect it, okay, dissect it and also be able to explain it, okay. Um, that's something that many are missing, that dimension, that geopolitical due diligence dimension. It's not that common. It's a bit rare still nowadays. Um, and we need to many times just, be aware of what's going on, but as well be aware of that interpretation of the message, okay, of the of the speech, of the political speech, and that position of each country, of each bloc, because sometimes it's there, the message is there, it's that we are not able to interpret it right, okay. And then we have this necessity of, I think we will have questions related to this for sure, of, defining some sort of board awareness, board governance within the companies. And this has been as well changing and evolving. So, thinking geopolitically, it's not something that we add to the cocktail of the strategy. It has become like the base of all the rest of the decisions, right? So it's not anymore like something we watch additionally or we consider additionally. It has become like directly one of the core topics to be understood. That is why thinking also geopolitically has become so important for business schools. And I know we will connect this with some of the questions. I know that you might be wondering how from AIF, from EAE Business School, we deliberately, try to, put more or provide more of all this into the content of the courses that we offer, because we believe that this is something that really adds value for corporations, firms, also for investors. I want to extend much more because I think we need to conclude at some point, right, Pablo? But the presentation was slightly longer and I could have maybe reduced it a little bit. But last, if you allow me to just go through this last bit, and I need to go back to the presentation. Okay, I did this. Okay. Are you watching? Are you?
Yeah, it's fine.
Yeah. Okay. Because I did something. Okay. So we're living kind of and I like this term because we're living kind of a moment that we lived. Well, not all of us, but the world lived not long ago. Okay. So once this Bretton Woods, remember that gold standard system. Well, once it ended, it created a new global environment, okay? Some companies were prepared for this, some weren't, and that's a fact, okay? So some succeeded and some failed. Well, similarly, we are now living one 1971 type of moment, okay? So there are things that will change and will remain different, okay, for for a long period of time. So this change is not going to be just a cycle that we are going into, and no, it's going to be a structural change, a system change, and it's been like that already. So we need to capture that idea. Okay, so imagine you managing a company in 1971 and trying to anticipate and trying to understand what can happen next. And then we had that Bretton Woods break. It was shocking for the world, right? Well, something similar is happening nowadays with this kind of power shift, and this trend to enter into a more polarized and more fragmented world. That one thing. And then I want to leave you with these principles, okay, as takeaways of this short, but I hope, interesting and attractive session. So a few takeaways for all of you should be this. Everything related to political decisions at the end becomes financial, okay? So corporations, they cannot longer be neutral politically. They need to understand where they are or who they need to be aligned with. That's essential. Okay, so neutrality is not an option. As we said before, you need to opt to align with some bloc or another. Okay, that's one thing. Read power like markets. Okay, this is important. Competitive advantage is increasingly depending on the capacity to understand geopolitics. That's a reality. That's a fact. So try to be solvent and informed as you go and as you evolve. Therefore, you can be better prepared to understand what's going on. Okay. And last, position deliberately. So find your position and do it intentionally. There is a lot going on in terms of capital relocation. And the thing is not where to position this capital or where to invest. The thing is that you need to choose to do it with intention. Okay, if you choose to be present in whatever region, or you choose to position your capital or your investment in whatever market, you need to do it with all that intention and not by accident or by chance. That's all. So you need to be aware of what you do and do things intentionally in terms of investment, but also, of course, in terms of business. And I will leave it here because I think we can take a few questions maybe.
Yeah.
And that would be amazing if you want to throw questions.
Yeah, thank you so much, Luis Miguel, for this very inspiring session. I think that it was really useful for every kind of students in business, in management, in international relations, in every kind of industrial activity. So yes, we have time for 2-3 questions. So this way we can respect the deadline for this session. So the first question from Angelica from LinkedIn. So this is so how do you think this the current situation in the Middle East, in Russia, in so many different places can impact companies' corporate strategies, especially those that are small, medium-sized companies? Because sometimes we focus too much on these big corporations, but they have many resources. But what about the small ones?
Smaller. Well, the conflict, you mean, Angelica, the conflict in the Middle East, and these ongoing tensions, right? And
Exactly.
I assume that's kind of the framework on how this is going to affect companies like mid-size or also family-owned companies in our in the EU, in Europe in particular. Is that what you want to? Yeah. So Okay, first of all, we need to understand that this is bringing more volatility to the markets. But this volatility begins with energy. So it's kind of shocking, right? It's going to create probably a situation of stagflation. I don't know if you are familiar with this term, but there can be, a period of significant inflation and maybe very low or even negative growth for our region in Europe, and we need to be prepared for that. So it's not the best scenario, right? So if these tensions evolve and they improve, I would always analyze this in, maybe giving it three dimensions or three scenarios minimum. So if things improve slightly, well, this energy tension, this market volatility, and especially this energy volatility will also moderate, right? So companies that are ready for this, well, some of them, I was in Galicia this weekend, and I was there with a group of, business owners and, company managers, and they were all, kind of scared about all this because some companies, especially in sectors that are exposed to metals, let's say aluminum, for instance, well, the price had gone up like around 20%, literally in a few days. So imagine that, for that sector that is exposed to the price of metals itself. But it's not only about energy; it's about more resources as well that are being affected. Also, in terms of supply chain, if we look at small companies, they can also be affected by this. Let's say more vulnerable logistics and more fragile supply chain network. So any company that has exposure to these routes because of the market, the product that they are transporting, well, they can have issues as well. So well, risks will be higher. We can say that risk premiums will be higher as well. When it comes to investment, there will be more volatility. The markets will show more volatility. They will be more, let's say, unstable for some time. And then companies need to incorporate all this. So whenever they navigate the situation that hopefully lasts not for too long, but we will, have this for a few months probably. Well, they need to navigate this risk environment. They need to be aware of these additional costs and try to cover them sufficiently. They need to think of all the mitigation strategies that they can, find out there. So, if it comes to sourcing somewhere else, well, they need to source somewhere else.
Okay.
I don't know if this is clear.
Yep.
Because of that supply chain volatility, if they are affected by these disruptions and and this situation of certain routes, well, they need to find some alternative routes and they need to act. They cannot stay like that, just watching what's happening and suffering the consequences. Okay, I hope this is clear, but companies need to be proactive and need to be constantly monitoring what's going on, trying to mitigate risks. And this is going to be painful for some, especially for some sectors that are very fragile and vulnerable because of their exposure to energy prices and some other materials that are going to increase in price as well. That's how I see it.
Thank you. So yes, we have the time for the last two quick questions. So the first one, this is from Daisy Ramirez. So yes, she wants to know, so what is the impact of the current situation in Latin American countries, especially in some sectors such as food, energy, or natural resources? So how do you think the current situation will affect companies in that part of the world? And the other question, so this is from from Pablo Medina.
This is
So,
from
so
Pablo
yeah,
Medina.
so I think you know this guy.
I know,
So
I
this
know.
is so how do you think this situation will affect companies internally? So do you think they will recruit maybe more experts in geopolitics, or they will ask maybe the current employees to upgrade their skills in this area? So what do you think this situation will affect internally all those companies?
Okay, okay. Okay, starting with this outlook for Latin American companies, right?
Yeah,
Well, the thing is that, of course, the world is interconnected, and they are going to also suffer. Whether if they are like directly connected to this trade situation, this you know situation, this tension that affects especially the Strait of Hormuz.
yeah,
Well, that is not maybe that of an issue for some of them, like directly in terms of energy. Well, it would depend on the country, of course. Okay, I'm trying to address it from the regional perspective, but they can face as well issues because investment might be affected. Some Latin American countries and economies are very sensitive to investment. We all know that. So if that investment from China or from the US is at some point cut down or reduced because of these tensions and these situations, that can be affecting, the economic and also the corporate environment of some economies in the Latin region. Uh, of course, some of them will be impacted by this collapse or this situation that is affecting prices, energy prices in particular, but they are kind of better positioned. They are not that close geopolitically. They don't have that proximity, and that risk is not measured equally. Okay, but indirectly there can be many impacts. Okay, China is the main trade partner of all the let's say all the continent, all the American continent, all of it. So it's the main infrastructure investor. So whatever affects that capacity of China to remain, betting on this region and investing actively can affect their economies. Also, the U.S. still is a very strong trade partner for many economies in Latin America. And of course, if the U.S. is focused somewhere else, well, that is going to have an impact. Also, there is a lot going on in terms of this deal. I don't know. Well, for some, it might be familiar, this EU-Mercosur deal, this trade deal, which covers a market which is huge, by the way, of around 700 million people. Well, there is this relationship going on. So everything that is impacting Europe is going to impact at the same time all this region, and this agreement of Mercosur is going to be affected by it. So for companies, I mean, as long as they are, depends on the sector, of course, but even companies that have certain fragility or vulnerability because of their exposure to European markets, as well to this Chinese investment, and also to the trade with the US, even these companies can do slightly well if they protect themselves, if they cover risks sufficiently. Same thing, that I said a while ago about companies in Europe. But in general, I mean, countries like Mexico, they can do well in this situation. Countries like Brazil, similarly, they even can take advantage at some point, or even some sectors can be boosted because of this fragility, in the energy world, or this situation, this tension created by the conflict, or because of this conflict of the U.S., Israel, and Iran. So it can be, there can be a mix of consequences. But anyway, companies should be prepared for this. It's not that far away. I mean, it's something that will have an impact, yes or yes. And last for this question of Pablo about how companies should be prepared for this environment, or how should companies maybe tackle the need of professionals that have the capability of dealing with these situations, right, Pablo?
Yeah.
So if companies are changing these profiles, or trying to spot profiles that are better prepared to interpret this all these signals and to understand this geopolitical complexity, the answer is that yes. I mean, it's clear yes. Companies need to do this, and they are actually incorporating new roles that are related to this field. Not only large companies, but also mid-sized companies, but that have this international dimension. So it has become a must to understand this reality, and also to be able to build a diplomatic as well strategy. So companies no longer are like reacting, they are also creating, and they are also participating, and they are geopolitical actors as well. So that's why understanding these dynamics has become essential for them to survive, to thrive in this complex reality. So yes, no doubt companies need to incorporate these profiles that have this diplomatic, let's say, approach, also this capacity to interpret what's going on, to think beyond, to think slightly out of the box, and to build plans that not only consider what's been what we can see, but also what we cannot see. So thinking beyond, and also doing this scenario analysis and scenario planning is going to be a must. So people that are well packed with the tools, with the capacity to solve these issues, are going to be demanded for sure.
Okay.
Like profiles like this, I meant. So that is going to grow.
Okay.
Yes or yes.
Okay. So thank you so much, Luis, for this very inspiring session. I think just it was really useful. I just took many notes, but for me, the most important headline, this is what you said. So neutrality is not an option anymore for companies, which means that companies, small and big companies, so yes, they need to revamp their strategies internally, externally, in collaboration with governments in their countries and in many other countries, depending on every company's situation. So yes, thank you to all of you, all those who follow this session through LinkedIn or YouTube. So yes, if you are interested in this kind of session, so yes, you can check the dates on the EAE website and the EAE corporate profile on LinkedIn and YouTube. So you can check the dates for the next master classes about different topics. And yes, I hope I will see you the next time. So thank you so much, and thank you especially, Luis, for your session. Thank you, and good evening.
Thank you as well, and thanks everyone for being there. I hope you enjoyed this session, and yes, here we are. You can get in touch at any time with us. Okay, thanks.
Thank you so much.
Bye.